Hello and welcome. I'm Ryan Hodge, and together with my partner Sandra, we are your licensed real estate brokers here in London, Ontario. I'm pleased to bring you our real estate market report for January 2026. January is always the quietest month of the year for real estate, but this January, the data is telling a particularly significant story. We have crossed a threshold that I have not seen in this market in many years, and it has major implications for buyers and sellers alike. Let's get into it. Starting with our January 2026 overview at a glance. 341 homes sold across London and St. Thomas this month, down 10.3% from January 2025. The average sale price was $624,550, essentially flat year over year, at down just 0.6%. New listings came in at 1,060, down 6.6% from last year. Active listings climbed to 2,257, a 12% increase over last year. And here's the headline number. We now have 6.6 months of inventory and a sales to new listings ratio of 32.2%. This is the first time in this cycle that our months of inventory has crossed above 6, which by definition puts us into buyer's market territory. This is a significant milestone. Let me put the sales activity in context. 341 homes sold is the lowest January total in our data set. January 2025 had 380 sales, January 2024 had 446, and January 2022 had 566 at the peak of the pandemic market. The current pace reflects a market that is operating well below its historical norms for this time of year. Buyers are cautious, many are waiting for interest rate clarity, and the urgency that drove the market in previous years is simply absent. However, I want to be clear, the buyers who are active right now are finding extraordinary value. On pricing, the average sale price of $624,550 is down just 0.6% from January 2025, showing remarkable price stability despite the soft demand environment. The median price came in at $585,000, actually up 0.9% year over year. This tells us that while transaction volumes are down, sellers who are pricing correctly are still achieving solid results. For the most reliable measure of home values, I always look to the home price index. The composite HPI benchmark for January 2026 stands at $558,000, down 8.6% compared to 12 months ago. The single-family benchmark is $614,000, down 8.8% over the year. The townhouse benchmark is $448,300, down 8.5% year over year. These benchmark declines represent the most significant affordability improvement this market has seen since the pandemic peak. The supply picture in January 2026 is the defining story of this report. Active listings reached 2,257, a 12% increase over last year and a 44.9% jump compared to January 2024's 1,558 listings. This has pushed our months of inventory to 6.6, crossing above the 6-month threshold that officially defines a buyer's market. For context, January 2022 had just 0.5 months of inventory. January 2021 had 0.7 months. We have gone from a fraction of a month to 6.5 months in just 4 years. That is a complete and total reversal of market conditions. New listings actually fell 6.6% to 1,060, which tells us this is not a flood of new supply. It is the accumulated effect of homes taking much longer to sell. The sales to new listings ratio of 32.2% is the lowest in our entire 12-month series. This is a deeply buyer-favorable reading. A ratio below 45% indicates buyers' market conditions, and at 32.2%, we are well below that threshold. In January 2025, this ratio was 33.5%, so conditions are essentially unchanged from last January. confirming that the buyer's market has been firmly established for some time now. The median days on market has surged to 47 days, up from 36.5 days last January, meaning homes are taking significantly longer to sell. The sale to list ratio of 96.5% tells us that buyers are successfully negotiating meaningful discounts from asking prices. Looking at the year-over-year comparison, homes sold fell from approximately 380 to 341, a 10.3% decline. Average price was essentially flat at $624,550. Total dollar volume fell 10.8% to $212,971,431. New listings fell 6.6% to 1,060. Active listings rose 12% to 2,257. Months of inventory climbed from 5.3 to 6.6. The sales to new listings ratio was essentially flat at 32.2 versus 33.5. Median days on market jumped from 36.5 to 47 days. The sale to list ratio dipped from 97.6 to 96.5%. For buyers, January 2026 is as buyer-friendly as this market gets. With 6.6 months of inventory, a sales to new listings ratio of 32.2%, and HPI benchmarks down nearly 9% year over year, you have maximum negotiating leverage. Homes are sitting on the market for 47 days on average, and sellers are accepting offers at 96.5% of asking price. You have time, you have choice, and you have power. Sandra and I have been watching this market for years, and we genuinely believe that buyers who act thoughtfully in this environment will look back on this as one of the best financial decisions they ever made. The market will recover. It always does. And those who bought during this window will benefit enormously from that recovery. For sellers, January 2026 demands absolute honesty and precision. With only 341 buyers in the entire market and 2,257 active listings competing for their attention, the margin for error is essentially zero. Homes that are priced correctly, presented professionally, and marketed comprehensively are still selling. The 341 transactions this month prove that. But homes that are overpriced, poorly presented, or inadequately marketed are sitting on the market for weeks and months, accumulating days that signal distress to buyers and ultimately selling for less. Sandra and I bring the data, the strategy, and the marketing platform to position your home for success even in this challenging environment. Thank you for watching our January 2026 market update. This is a market at a pivotal moment. Inventory is at multi-year highs, buyer leverage is at its peak, and the conditions that created this environment are beginning to shift. Whether you are looking to buy, sell, or simply stay informed, Sandra and I are here to provide the clarity and guidance you need. If you want to know what these numbers mean for your specific situation, reach out to us at ryanandsandra.ca or call us at 519-601-1160. We're always happy to talk. Take care, and we look forward to connecting with you soon.